Hi, I'm Lachlan, research analyst on the Montgomery global team. For this week's video insight, I'm going to talk about where we see value in Airbus, a holding in the Montaka long portfolio. Last Friday, our portfolio manager Chris DeMasi pitched Airbus to the Sohn Hearts and Minds Investment Leaders Conference, where leading fund managers from Australia and around the world shared their best investment ideas to raise millions of dollars for medical research. We like the business as a high-quality global leader with unmatched expertise, and for the structural tailwinds that point to decades of growth to come. For over 20 years, Airbus has operated in a global duopoly with Boeing, producing passenger aircraft protected by extremely high barriers to entry from further competition. Their 7,400 plane backlog accounts for the next 9 years of demand and gives Airbus 57% market share of future narrow-body and 47% of wide-body aircraft production. Airbus structural growth is underpinned by the global population's expanding middle class. Oxford Economics estimate growth from 3 to 5 billion people over the next 20 years. These 2 billion people will help drive increasing demand for global air travel, which, as you can see from the graph, doubles every 15 years. Moreover, global plane load has grown from under 70% in the 1990s to almost 85% today, as airlines have become efficient, leaving little to no space for passenger growth using only the current fleet of aircraft. As such, this ever-increasing demand for air travel requires the global fleet of aircraft to both grow in size and for current stock to be replenished. As you can see, if they are to account for expected demand growth, airlines will require another 26,000 planes to be manufactured, on top of the 11,000 needed just to refresh the existing fleet as it ages. Over the next 2 decades, Airbus is perfectly positioned to take a major chunk of these 37,000 new deliveries. Now, after the recent sell-off, a share of Airbus business is trading at about €93, which suggests the market may only be accounting for low single-digit growth and minimal margin upside. By contrast, when you account for all the structural drivers I've mentioned, it is possible to see that Airbus meet mid-single-digit revenue growth and considerable margin expansion over the next 2 decades. Most importantly, this provides us with very low downside risk, and while Airbus remains the high-quality global leader it has proven to be. Thanks for watching. You can follow us on Facebook or Twitter.